Welcome back. Big story in the market remains the backup in yields, which have made stocks more jittery lately. For more, let's bring in Ed Yardeni of Yardeni Research. Welcome back to Post 9. It's always good to see you in person. That's the story? Backup in yields?
Yeah, I think that is the big story right now. I've been getting calls from our accounts more often than that about what's going on in the bond market.
What are you telling them?
Well, I'm telling them that our base case is pretty much intact. We're still looking for the 10-year bond yield to fluctuate around 4.5% plus minus 25 basis points. We get to either end of those range and we'll start getting jittery. But at this point, the jitters are about the 30-year bond yield. That yields over 5%. Mm-hmm. A lot of the jitters is actually overseas. It's Japan. Japan seems to be having a real sovereign debt crisis. But all in all, I think the economy is going to remain resilient. I think the consumer will stay resilient. Capital spending will remain resilient. And if that's the case, then the stock market should hold on to these gains.
It'll look through some of the moving yields if it deems that it's for enough of the right reason to offset worries about the deficit?
I think so. And so far, the reaction to the big, beautiful bill getting through the House seems to be pretty muted. Maybe they're waiting to see what happens when the Senate passes it.
Muted? What was yesterday? That didn't feel muted.
You're right. But I'm talking about the level of the 10-year bond yield. We've been here before. We've been fluctuating around here for a while, so that's what I mean by muted. The 30-year has been not so muted. The 20-year auction didn't go very well. So there's definitely signs that the bond market is stressed out in some areas, and that's creating the jitters in the stock market.
But you're still convinced that growth is going to surprise, the consumer is going to surprise, earnings are going to surprise,
right.
And then that supersedes just about everything else?
I think it does. I think that's exactly the way I'm looking at it. And in terms of the consumer, I think what people really have to appreciate is the retiring baby boomers. There's, let's say, 70 million of them. They're sitting on $80 trillion of net worth. It's the richest generation ever, and they're spending it. And on the capital spending side, the president has been fairly successful in bringing some pretty significant sums of money to be invested in the United States. So put it together, and I think the economy is going to remain resilient.
5,862 is where the S&P currently sits. What seems reasonable for you between now and the end of the year?
6,500. I mean, at the beginning of the year.
65.
I mean, at the beginning of the year, 7,000 seemed reasonable to me. And then all of a sudden, I, like everybody else, got hit by the turmoil over the tariffs. So I did lower it down to 6,000. But now, just about a couple of weeks ago, I raised it back to 6,500 in reaction to the Trump backing off on the tariffs on China for 90 days, on most of them.
Thanks for coming by. It's good to see you as always. We continue to watch these markets, which are doing pretty well right now. That's Ed Yardeni.